Economist, a professor of finance at the University of Ghana. Thank you very much for your time. Good morning to you, Prof.
Yes, good morning, and good morning to your cherished listeners.
Prof, how are you?
By God's grace, we are keeping well.
Well, first, let me start by asking you for your assessment of the economic situation we have currently. Where are we?
Things do not look good. From the macro side, things do not look good. There are a number of factors that have contributed to this. Systematically, over a period of time, what takes us to the IMF is what will take us to the IMF again. What are the things? Fiscal indiscipline, right? Manifesting explicitly in debt formation and associated implications. The economy is unable to bear that anymore. When you look at the data, you will see that practically every 3 years, some few months, since Ghana officially joined the IMF, we've had to go to the IMF. So if you look at it, our last program was effectively April 2019. So somebody will say, the time has come. But where we find ourselves right now has more to do with our own policy failures, lack of action, wastefulness. Then, of course, we cannot run away from the external development. But you could not, and we should not, outsource everything to external development. Because the global level development is actually revealing local reality. So it's only magnifying existing vulnerabilities in our economy in ways that we haven't seen in recent times. So if you ask me where we are now, the position is not good. And I think that we have to be open. Government will have to be open, embrace greater disclosure and transparency, and take the right decision on time, at the right time. If you delay, it's going to be more costly, because it's not as though we have substitutes in terms of homegrown program or policy that can rival an IMF program with a inbuilt discipline and monitoring mechanism. We don't have that. And not doing anything could not constitute an alternative. We need an effective policy response to what is going on right now. And time is not on our side. Let me put it that way. If you look at where we are now, hello?
I'm listening to you, Prof.
If you look at where we are now, and then you compare that to 2014, you realize that in 2014, of course, there were external development also, right? But then the government embraced alternative ideas, got people on board. There was a Senchi consensus, an attempt, a genuine attempt to look at a homegrown solution to problems that have also external dimension. But then we realized that the homegrown policy or the homegrown fiscal consolidation wasn't yielding intended results. There was a genuine effort. Then the government took that bold decision. I believe that it was a bold decision, and I believe that it's also leadership, right? When you are a leader and you realize that, no, the direction I'm going, regardless of my good intention, is not yielding the desired result. I need to take another course. In that case, you will sacrifice your personal pride for the common good. That leadership, we need that now also. And the reason I'm saying we need that now is that we are at a situation where external support is needed like yesterday. So we have to come to that point that we need to take this. And let me also say that going to the IMF, we all know, both parties, they are all aware that going to the IMF is not like it's a panacea to all our problems. Having been there 16 times and adding the 2020 rapid credit facility that we got of $1 billion, that IMF probably is counting as our 17th program. It tells you that there's a lot more that we have to do ourselves, that the best helping hand is actually at the end of our own arm. But now we find ourselves where we need some kind of hiding place, a briefing space. And going to the IMF, of course, depending on the kind of program or facility we would apply for, assuming we decided to go for the extended credit facility, which we are familiar with, okay, which probably will run between 3 to 5 years, probably we could negotiate for a financing arrangement to the tune of $3 billion. That is concessional at a very low cost. That will give us some kind of moratorium. Okay, that will be far better than actually saying that you're going to talk to private banks, financial institutions to syndicate a facility that will come at a very higher cost already, even in the domestic market, because we have decided to finance the deficit from the domestic market. You could see where the interest rate is right now. So you are borrowing 6 months, 1 year or so at 25%, 26%. That's like giving the country away for cheap, for free to investors, because you are in a vulnerable situation. So when it happens that way, you realize that your interest cost going forward is going to be huge. And let me say this, unlike previous administration or previous years, let me put it that way, there's something unique about where we find ourselves now. So the highest or the biggest expenditure item right now is interest payment. Okay? It used to be compensation of employees. In fact, Senti consensus, one of the things that was flagged was the wage bill, because it was the biggest expenditure item. The wage bill is no longer the biggest expenditure item on our resource allocation. It is rather interest cost. Okay, so interest cost, that tells you this is how much we are giving to investors, okay, for their contribution to the economy. But then return on labor offered by Ghanaians, proxied by compensation of employees, is now very low. Let's put it that way. And in fact, if you look at Ghana's minimum wage per capita GDP, is the lowest in West Africa. Is the lowest in West Africa. So it means that the minimum wage we are operating with here is the lowest. That is labor devaluation. Even though we have been saying that compensation of employees is whatever and all of that. If you look at the dynamics now, and the reason this may not be reversed going forward is because of where your interest cost is, which is crowding out priority spending. So you could not logically look at all these things and put pride ahead of the common good. We could not do that. Okay, and that is not to suggest that we think that going to the IMF is a panacea to all our problems. Where we find ourselves right now, some drastic measures has to be taken. Now, the one reason perhaps the government is holding on, unlike 2014, hello?
I'm still listening to you, don't worry.
Yeah, unlike 2014, is that, in 2014, the government also didn't want to go to the IMF.
Yes, initially. That's why they went for homegrown. Yeah,
they didn't want to go to the IMF. You see, there is this thing about surrendering to the IMF that makes you look like you are incapable, right? But of course, we also know relatively well-run economies that go to the IMF for policy support. There are different kinds of products. Is that okay? Different kind of products. Some go there for policy support, some go there for standby credit arrangement and all of that. Okay, so there are countries with huge reserves that go to the IMF and the rest of them. So that's fine. But then in 2014, our international reserves betrayed the government. Okay, so the data, if you look at the data in 2014, they were not that precarious as we have them right now. Okay. Along some of the lines, you check. Debt to GDP ratio in 2014 wasn't as bad as what we have right now. Interest cost to total revenue wasn't as terrible as what we have right now. If you look at other indicators, but there was one thing that didn't favor the government at that time, which was our international reserves. Our international reserves in somewhere middle of 2014 on net basis could only cover 2 weeks of import. Okay? So when your international reserves deplete to that level, you are exposed. It means that your economy practically is coming to a standstill because the bulk of international trade, import, is done on credit. And your measure of credit worthiness on international trade arena is the level of your reserves, measured in terms of the number of months of import cover. Now you realize that because this government received a lot of inflows from the IMF, COVID inflows and all of them, our international reserves, and also the fact that before COVID intensified here and shut the international capital market, Ghana government somewhere March had entered the Eurobond market and secured $3 billion before practically the market shut. So our international reserves was relatively strong. So and therefore it offers some level of cushion stability to the city. But the reason we are saying that this is not sustainable is that the frictions are burning through the international reserves right now. So it means that in the next 2-3 months, you will not have that same level of international reserves you had at the beginning of the year. Then the city would have to readjust to a new equilibrium. This is where we are now. So you don't wait to that point. When it gets to that point, then it means that you're going to go to the IMF and negotiate from a weak position rather than negotiating from position of strength.
Prof, you even said that time is not on our side. And there are those who have already suggested that we are already in a position of weakness. That if we go at this time, we'll not be negotiating from a position of strength. That if we had gone in January, perhaps we would have a bigger... you agree with that suggestion?
Yeah, in fact, my own considered view is that the best time to have done this was in 2021 and inbuilt that in the 2022 budget, which was presented to Parliament in November 2021. The reason is this. If you look at the data from May 2021, inflation was single digit. Okay? May 2021. Let's say a couple of months down back. But look at within this short time, right? Look at where we are now. Then you want to look at your interest rates in 2021, May 2021. Okay, so, and really, this wouldn't have been a heightened discussion if the government had done that in 2021. Do you know why? Would have gotten over it. Don't you think so?
By this time, yeah.
I would have gotten over it. Ghana, maximum 2-3 weeks. It just needs a new storyline, and then it cements the old one. Okay? So, but in any case, we have been to the IMF. Look, do you know something? When we were in lockdown in 2020, Africa was in lockdown romance with the IMF. Whilst you and I couldn't go out to even go and buy anything, Africa was in lockdown romance with the IMF. By the time the lockdown was over, practically, Africa had taken in excess of $25 billion from the IMF in COVID-related support, including Ghana government. So what is the issue? What is the issue? We have been there. And the IMF is counting that as a program, more or less. And that is why we are talking about the 17th program. Until then, we have gone there 16 times. So really, if you don't go this month, you're certainly going to go. You're certainly going to go. It's just a matter of time, right? So that is why I'm saying that the more we delay, the vulnerabilities worsen, right? And it's not in anybody's interest.
Interesting choice of words, Prof. Lockdown romance. But let me. There are those, because you've already suggested that we need discipline.
Yeah.
At this time, that no other program can give us what the IMF program gets us. If we decide to do homegrown policies, in fact, the government can decide to be indisciplined. There will be no monitoring, and there will be nobody demanding that you are disciplined at this time. But why is it important that this government? Because there are some governments that perhaps can hold themselves to that level of discipline. Can this government do that if it decides to go with another alternative?
Government?
Yes.
This government?
Yes.
Oh, come on. What are you talking about? They will not. If they would, they would have done it. In fact, there should have been reshuffle long ago.
A reshuffle?
Yes.
If you say a reshuffle, which aspect? Because you're interested in finance, are you suggesting that the people who are managing the economy or other areas?
I think from the we need to take another look at those managing the economy. I think we should not run away from that and embrace new ideas.
Is it the approach that's the problem?
All of that counts, my brother.
So,
and then also we need to do something about the size of the government. You know something?
Size.
A case was made in 2017 that given the enormous challenges, size matters. You need more ministers, deputy ministers, and all of that. We accepted that. Not that we were totally happy. We accepted that. After 4 years or so, you want to be able to evaluate that and see the size effect, whether it has actually delivered. If it hasn't, as a leader, you want to say that, no, can I adjust the size? In hard times, you look within before you touch somebody's e-pocket, right? You look within. What is it that we can do efficiently in these hard times, because we can't use that same cost size with dwindling revenue stream to tackle structural bottlenecks that have been with us for decades. Size is important. The size of government now, I don't think that is optimal.
Because they reduce it from the 2017 size that you're talking about. It's gone now.
Not where it has to be. Exactly, certainly not. Okay, then you want to look at budgetary allocation to the seat of government. Okay, and then beyond that, do you know something? Then you want to look at the social programs, flashy programs that are expensively arranged and inefficiently delivered. The steep physical cost of such flashy programs, right, is huge on us, and usually they are inefficient. If we can ring fence free senior high school, after all, how much do we spend from there? But then you want to look at the other social program. This one cuts across different regimes. And look, even if you look at the last IMF program, because of the fiscal discipline that was imposed, okay, we always found a way to dribble the IMF, either by pushing certain expenditures through state-owned enterprises and accumulate arrears from that end rather than the central dashboard, right? We do that. But at the end of the day, it will come back to haunt you. And that is where we are now. And you can see that clearly the economy is unable to bear all this injustice. Yeah.
I know you talk, because you're saying we need like $3 billion from the IMF. It will be very helpful to us. Interest payments are adding up. That is a big issue. But the unions also say if we bring in the IMF, will suffer. You work for the University of Ghana, so definitely you are a member of one of those unions.
Yes.
Do you agree with the apprehensions?
Look, do you know something? Hello?
Yes, I'm listening to you.
Let's put it this way. there is some level of austerity that we have to embrace as a country right now to get out of this situation. Either we do it through an IMF supported program, or we do it through homegrown and impose, and assuming we're able to impose the necessary fiscal discipline on ourselves. That we have to do. Sometimes it's easier for our own government. Hello?
Yes.
It's easier for our own government for things they had wanted to do that sometimes they couldn't communicate to Ghanaians, and then under an IMF program they blame it on the IMF. This is what happens. Because the IMF doesn't really impose anything on us. Even the program, at the end of the day, is Ghana government's own program, supported by the IMF. Is that okay? So if you look at the 16th IMF program under the previous government, you will see a lot of the things from the census finding its way into the IMF program. These are things we said we will do, that we have to do. Wage bill freeze. Was it not agreed as Senti? Hello?
Yes.
It was agreed as Senti. All labor unions were there. The government white paper that came after that has nothing to do with IMF. In fact, the original IMF program 2016, for the adjustment and all of that, actually exempted health and education from the freeze in spending, in wage bill. But do you know what happened? Because there had to be some kind of public sector wage rationalization and the rest of them, and we didn't have the capacity to do it. We roped in health and then education, and said that it has to be done on net basis. It was from those arguments that now, even after the IMF program, do you know that health sector, education still come to recruit at will? You know that, right?
Yes.
After the IMF program, what has that got to do with IMF? Because we ourselves knew that we needed to do some of these things, and then we blame it on the IMF. As we speak right now, there are nurses and others who have finished and have not been loaded onto the public payroll. Is it not true?
Yeah, that's true.
What has that to do with the IMF? It invests now. In fact, from 2015 of that.
Hello, Prof.
Hello?
Yes. I lost you there for a moment.
Yes, I'm saying that as we speak right now, universities, right, can no longer recruit at will like before. You first have to get financial clearance from the Ministry of Finance, predetermined, not based on your recruitment needs. There's a fixed allocation that is approved and shared.
Even without an IMF program.
Yeah, this is what we are doing now, because we realize that somewhere, somehow, we have to contain the wage bill. So why are we blaming all of that on the IMF? Why are we using them as a scapegoat? Let's face the reality. That is why. So that's why there are certain hard decisions, right? That we blame it on others, that so and so and all of that. And essentially, that is also what the IMF program does. The reason that is true is that if we had been efficient, look, do you know something? As we speak right now, check certain state-owned enterprises and see the expansion in the payroll, GNPC, TOR, Ghana Gas, and all of that. Okay, all of this. So whilst we are saying that there is freeze on recruitment and all of that, recruitment are going on. And they're going on. Check the growth in the size of the payroll of some of these institutions since 2017. You check, and then compare that to the critical areas where we need critical labor in the area of health, in the area of education, and see whether any of these places have been able to witness such expansion. Because some of these quasi-state institutions, have seen a low-hanging fruit where they push their political customers and the rest of them through. And we mess up the system. So things that we should have done gradually, where the pain will be less, we fail to do them. Then all of these things manifest explicitly in this crisis. So when you go for an IMF program, because maybe it's a 3-year program, right? So things that you should have done over 7 years or so that you failed to do now has to be done within the shortest possible time, like 3 years. That is surgery. On the average, surgery is painful. It doesn't matter the level of anesthesia they apply. Surgery is painful. You go for IMF, like under this current circumstance, they'll put drifts on you.
Well, let me end by finally asking you about this, because the finance minister initially said we needed to burden share, and so he introduced e-levy.
I don't support it.
Majority of Ghanaians oppose it, but they are collecting it anyway, Prof. Why is that failing us?
As much as possible, you know, do you know something? The state should not put the citizens in a position where the citizens will develop coping strategies to undo the state. You see this tax handle, a lot of Ghanaians are working hard to undo the tax handle. This is not good. This is not policy. The reason I'm saying so, do you know something? You may be collecting something. But you know what? You are actually undermining trust in state institutions, in our democratic institutions that in the medium to the long term will suffer. Just because you want to collect 1 billion cedis this year or next year or something. That is where we are heading towards. And when people develop coping strategies to offset this tax burden, chances are that they may extend those coping strategies to other progressive tax handles going forward. Everybody will be looking at how to undo the state because they think the state is not there for them. Those are the things we should be looking at. You know, it's not because the state can legislate anything, whether with all members in parliament or not, that then you go ahead and do it. Sometimes you may get to a point and it will be like legislating laugh. It will be observed more in breach than in compliance. That is what you are seeing right now. And that is why you see the low level of patronage. That's what we are seeing now. You legislate laugh and see whether it will be observed in laugh. Meanwhile, there are other progressive tax handles that we can improve efficiency and collect more revenue without burdening the faithful few and undermine a critical sector of the economy that is expected to expand faster than the traditional economy, which we call the digital economy. The digital economy is supposed to expand faster. Look, the future is in digitization. So digital finance, digital economy, broadly, along the entire value chain, that is where the future is. And countries are preparing in that area and investing appropriately. Look at how India is winning the digital war. Okay? You check globally. Indians all over the place. Because some leadership at some point in time decided that this is where the future is heading and we are investing appropriately to enable our people to optimize the opportunities from there. What are we doing in our part of the world here? Look at the negative distractions that the e-levy has brought. Compare that to how much we've been able to collect. How does that help you overall? We are looking at growing the pie. Grow the pie. Use tax as an investment, as an enabler, not as a hammer. Grow the pie. So that later when you even take 5% of a bigger pie, it's far better than taking 45% of a smaller pie. Once we do this, we are not saying that we do not recognize that the state should collect more money. We all do. How about exemptions? Look, let me tell you something. Go and check the State of the Nation address. I've said this before, and it's not really anything new. Check the State of the Nation address 2019. We said that the state lost 4.66 billion cedis in exemptions in 2018. Even that one, it wasn't total exemptions. And in there, we came to the conclusion that if nothing was done about exemptions, then in the next 10 or 16 years or so, we will lose more than half of Ghana's revenue base to exemptions alone. So really, the problem is exemptions. How do you solve that problem by introducing e-levy? We are willing to grant exemptions to multinationals who are in tax-paying position and making money here and sending it to their investors in their host their countries. we are willing to grant them exemptions in billions of dollars. The average Ghanaian, we are only willing to grant him or her exemption of 100 Ghana cedis a day as the minimum threshold. Please, let's look at all of this. We are not saying this because of whatever. The situation calls for this kind of frank discussions, so we are able to get out of this, so that we look at how do we mobilize more revenue progressively. It's important. E-levy is regressive. Okay. And when we have layers of indirect taxes as we have in Ghana, they all add up to the high productive cost base of doing business, and that itself makes the private sector uncompetitive.
Well, Prof, thank you very much for speaking to us. There's a lot more, but I'll have to leave it here, and I'm sure we'll have subsequent conversations on this.
Thank you. I certainly will have to end it. Otherwise, the next I won't get anything to talk about. Thank you. Good morning.
Professor GODFRED BOPKIN is a professor of finance at the University of Ghana.